Dear friends, welcome to Weekly View on Markets. Markets rallied more than 2% during this week after the ceasefire between Israel and Iran. Broader market rallied even more. Mid cap index was up by 2.4% and small cap index was up by 4.3%. Oil prices dropped to $67 per barrel from $77 per barrel before the ceasefire. Trade talks between China and US are progressing in the right direction. Trump has announced that India will get favorable trade tariffs. All these factors contributed to the rally. Charts are looking very strong. They are in a uptrend and indicate further upside in the market. Improving macroeconomic data, earning recovery of the companies, lower interest rates, good monsoon progress are positive factors for the markets. Q1 results will be major driver for the sustained rally in the markets in the month of July. SIP investment of retail investors has touched 27,000 crores per month. This money is coming into the market through DII inflows and it will support the market at higher levels. SIP investors should continue their SIPs and hold their investment for long term to get better returns. Nifty closed at 25,637 with a gain of 525 points. That is a gain of 2.09%. Bank Nifty gained 2.12%. That is 1,191 points and closed at 57,443. Midcap index gained 2.4%, gained 1,389 points, closed at 59,385. Small cap index closed at 18,976 with a gain of 782 points, that is 4.3% for the week. India, which is cooled off by around 9%, it is at 12.38. Most of the sectors have gained during this week. Metals gained about 4.81%. Media, commodities, consumer durables, infrastructure, oil and gas all gained between 3 to 4%. Energy sector, NBFCs, PSU banks, manufacturing, healthcare all gained between 2 to 3%. Only realty and information technology were the two sectors with ended with small negative losses. Now let us look at technical charts. This is the daily chart of Nifty. Here we can see Nifty was trading for more than 1 month in a range and now it has conclusively broken out of this range and Nifty has given a strong up move during this week. So this uptrend is likely to continue and in coming weeks or within a month we may see Nifty touching all-time high of previous, that is 26,250. This is the chart of Nifty mid cap index. You can see that mid cap index is in a strong up move, making higher tops and higher bottoms. This uptrend is likely to continue and Nifty mid cap index can touch a previous all time high of 60,750 in the coming weeks. And mid cap index has a strong support at around 57,000 levels. This is the chart of Nifty small cap index. Small cap index is also in a strong up move and this up move is likely to continue as the chart is making higher tops, higher bottoms, and Nifty small cap index has previously touched a high of around 19,700. So ultimately, we'll see Nifty small cap index also going to the all-time high levels in coming weeks. This is the chart of Bank Nifty index. Bank Nifty index has broken out of this channel. Once it tried to break out, but it has come down. This time it has sustained and it has gone above. And Bank Nifty index is already trading at all-time high. So there is no resistance. It is trading in the blue sky as per the technical term. So this strong uptrend or up move in Bank Nifty can take Bank Nifty towards 60,000 levels in coming weeks. Now let us look at some of the fundamental macroeconomic parameters. Foreign exchange reserves is at 697.9 billion US dollars. It is down by 1.1 billion dollars for this week. The forex reserve of RBI is in a very sound position. So this shows that the strength of the underlying Indian economy. Foreign exchange rate is at 85.48. Rupee has recovered, that is, rupee has appreciated during this week. Dollar index has further come down to 97.44. So that shows that overall dollar demand globally is coming down. That is one of the reasons for the rupee to appreciate. Brent crude price is at 67.31 US dollars per barrel. This had gone to 77, 78 level when the war broke out between Israel and Iran. And Iran threatened to stop oil movements through the channel, that is Hormuz channel near Iran. But now all that is sorted out due to the ceasefire. So oil prices have again come down to around 67.31 per barrel, which is very good for all oil importing countries. Gold price is cooled off. It is at 95,524 for 10 grams, 24 carat. Gold prices had hit almost 1 lakh during the peak of the war crisis. Now it is cooled off to 95,524. FIIs have bought 4,423 crore during this week in equity. DIIs have bought 12,389 crore in equity during this week. Continued FII buying and DII buying at lower levels. Whenever there is a dip in the market, they tend to buy. So that is giving good support to the market. So because of these fund flows, I don't think there will be a big correction in the market. Ceasefire between Israel and Iran has triggered the rally in the market during this week. IMF has revised India's GDP forecast at 6.5% for the for the current financial year. Good progress in monsoon. It is widespread and good monsoon is a positive factor for the markets. Trade deals are being closed by US with China and India. So the trade war impact is also likely to fade off. These are all the good developments for the markets. Charts are looking very strong and further upside is possible technically in the coming week. Mutual fund investors should remain invested for better returns in the long term. They should continue their SIPs. Those who have invested lump sum, they should stay invested for better gains in coming months and weeks. This is all for this week. If you like my video, please subscribe to my YouTube channel. You can refer to your friends. You can ask your questions. We'll meet again next week. Thank you.